Are you wondering how to use your tax return effectively? Well, you're certainly not alone. Each year, countless individuals find themselves staring at a tax return, wondering how to make the most of this financial windfall. It's a common conundrum. Do you splurge on a treat or pay off that nagging debt? Perhaps you should boost your savings for a rainy day. But here's the thing. Your tax return can be a powerful tool in your financial arsenal. It's a golden opportunity to break free from the cycle of debt and build a safety net for the future. Yet, it's not always clear how to go about it. How do you balance paying off debt with boosting savings? How can you ensure you're using your tax return in the most effective way possible? Fear not, because we've got you covered. In this video, you will learn simple and effective steps to use your tax return to your advantage. Firstly, it's essential to know what a tax return is and how it works. A tax return is a document you submit to your country's tax authority, providing details about your annual income, taxes paid, and eligible deductions. It's a way of settling up with the government to ensure you've paid your fair share of taxes based on your earnings for the year. Now let's talk about how tax returns are calculated. Throughout the year, you pay taxes on your income. This could be through withholdings from your paycheck or estimated tax payments if you're self-employed. At the end of the year, you calculate your total income, apply deductions, and figure out how much tax you owe based on your taxable income. If you've paid more tax than you owe, you get a refund. If you've paid less, you owe additional tax. But why do people get tax returns? Well, a tax return is not a win or a bonus. It's your money that you've overpaid to the government throughout the year. In other words, you've given the government an interest-free loan. Let's break it down further. Suppose your employer withholds taxes from your paycheck. They're estimating your tax bill based on the information you gave them when you started the job. If your circumstances change, like getting married or having a child, or if you qualify for tax credits or deductions, you might end up overpaying. That's why it's crucial to review and update your withholding information regularly. On the other hand, if you're self-employed, you might pay estimated taxes quarterly. If you overestimate your income, you could also end up overpaying. So getting a large tax return means you've had too much tax taken out of your income throughout the year. Instead of having that money available to you each month, you've essentially loaned it to the government and are just now getting it back. Now that you understand your tax return, it's time to put it to work. One of the most effective ways to use your tax return is to pay off your debt. Debt is a relentless financial burden that can feel like a dark cloud looming over your sunny financial future. It's a beast that needs to be tamed. Paying off your debt can provide you with a breath of fresh air, freeing up your income for future use. It's like giving your future self a financial high five. So, how do you decide which debts to tackle first? Well, it's a bit like tackling a tricky puzzle. You've got to strategize. Firstly, consider the interest rates. Debts with higher interest rates are like financial vampires, sucking more out of your pockets the longer they linger. Therefore, it's usually wise to pay these off first. This method is commonly known as the avalanche method. Picture it like this. You're on a mountain and you've got to cause an avalanche to clear your path. You start with the biggest, most threatening piece of ice, the debt with the highest interest rate. Once that's gone, you move on to the next one, and so on until your path is clear. On the other hand, there's the snowball method. This involves paying off the smallest debts first, regardless of interest rate. The idea here is to gain momentum. Each small debt you pay off gives you a sense of accomplishment, a small victory that motivates you to keep going. Think of it as building a snowball. You start small, but with each roll it gets bigger and bigger, eventually becoming an unstoppable force. Both methods have their pros and cons, and the choice between them depends on your personal circumstances and temperament. What's important is that you make a plan and stick to it. Remember, paying off debt isn't just about freeing up your income, it's also about improving your credit score and reducing financial stress. It's about taking control of your financial future. By paying off your debt, you can create more financial freedom for yourself. And that, my friends, is a step in the direction of true financial independence. Another effective way to use your tax return is to boost your savings. Now let's discuss why savings are so important. You see, savings are like a safety net for your financial life. They're there to catch you when unexpected expenses come your way, like car repairs or medical bills. But that's not all. Savings can also help you achieve your financial goals, be it a dream vacation, a new home, or even starting your own business. So, how much of your tax return should you put into savings? Well, it depends on your financial situation and your goals. If you're just starting out with saving, a good rule of thumb is to aim for at least 3 to 6 months worth of living expenses. This should give you a solid safety net. Now, if you already have an emergency fund in place, you might consider using your tax return to boost your long-term savings. These could be funds for retirement, a down payment on a house, or your child's education. Here's a tip. Consider allocating a percentage of your tax return to your savings. This way, you're not tempted to spend it all at once. For example, you might decide to save 50% of your tax return and use the rest for other financial goals. Remember, boosting your savings doesn't mean you have to live on a shoestring budget. It's about making wise financial decisions that will benefit you in the long run. It's about taking control of your financial future and making your money work for you. Start by setting a savings goal. Then, make a plan to reach that goal. Your tax return can be a great kickstart to this plan. It's like a yearly bonus that can help you speed up your savings journey. And finally, remember this: every dollar you save is a step towards financial security. It's a step towards peace of mind. It's a step towards making your dreams come true. By boosting your savings, you can be prepared for future financial challenges. Finally, consider investing a portion of your tax return. It's a wise move that could set you on the path to financial freedom. You see, the beauty of investing lies in its potential to provide a return on your money. It's not just about stashing away your hard-earned dollars in a piggy bank. It's about making your money work for you. Investing might seem intimidating at first, especially with all the financial jargon and the fear of risk. But let me tell you, every great investor started somewhere. They took the plunge, learned along the way, and reaped the rewards, and so can you. So, how do you go about it? First, identify your financial goals. Are you saving for retirement, a down payment on a house, or your child's college education? Your goals will help shape the type of investments that are right for you. Second, do your research. Understand the basics of different investment types. From stocks and bonds to mutual funds and real estate, each has its own level of risk and potential return. It's important to diversify your investments to spread your risk. Third, consider seeking advice from a financial advisor. They can provide tailored advice based on your individual circumstances and goals. Remember, investing is not a one-size-fits-all solution. What works for one person might not work for another. Fourth, start small. You don't need a fortune to start investing. Even a small amount from your tax return can grow substantially over time, thanks to the magic of compound interest. Fifth, be patient. Investing is a long-term game. It's not about getting rich quick, but growing your wealth steadily over time. Lastly, keep learning. Stay informed about market trends and continuously educate yourself about financial matters. Knowledge is power, especially in the world of investing, so there you have it. Investing your tax return can open up a world of possibilities and help you achieve your financial dreams. Investing can help grow your wealth over time. In conclusion, your tax return can be a powerful tool for improving your financial health. Let's recap what we've learned. We've delved into understanding your tax return, a crucial first step in making informed decisions about your finances. We've also discussed how you can use your tax return to pay off debt, an effective strategy that can help you free up more of your income for other purposes. Moving forward, we highlighted how your tax return can be used to boost savings, providing you with a safety net for unforeseen expenses or opportunities. Lastly, we explored the option of investing your tax return, a move that can potentially grow your wealth over time. Remember, it's not just about getting money, it's about using it effectively. It's about making strategic decisions that can transform your tax return from a once-a-year windfall into a stepping stone towards financial freedom. Remember, the key is to make your money work for you. Thank you for watching, and don't forget to subscribe for more financial tips and advice.